In this video, I'm going to explain how to use the day trades in the TT Blackbox. So right now, obviously the market is closed. It is April the 11th and it's a Saturday. Real quick, if you're wondering why some of these boxes are blank, that's because we're not receiving, live data at the moment. In our system, we have it to where after 2 days, old data is purged out of the system for, some of these elements right here, just to maintain stability with our servers. All right. So I have open TOS. This is Thinkorswim, and I'm using the on-demand feature, which is essentially just paper trading, except you can go back and replay the market. So this is how you do this, and this video is going to be a little longer, but if you really want to know how to day trade using the TT Blackbox, it would behoove you to watch this if you haven't watched me live trade when I go live on Tuesdays and Thursdays, depending on my schedule. But if you've never watched me live trade, it would behoove you to actually watch this. So, as the day starts, and you've decided that you want to day trade based off of one of these alerts that will roll through. Now, you may see a lot of these alerts coming through and think that it's overwhelming, that there's like 1,000 plus alerts, and there's really not. The TT Blackbox does scan the entire market, but in order for a day trade or even a swing trade to trigger in our system, the parameters for our algorithms have to be met. It's just not trying to find any ticker to throw out to you. These algos have to be met and hold for a certain time period. So with that being said, it's really only alerting around 100 different tickers a day on average that meet its threshold. Sometimes for swing trades, it won't even alert. Other times, it will alert 2 times a day. It just really depends on the market and everything having to line up with our algorithms. So the day starts, obviously the market's closed, and I'm going to be sitting here at 15:05 Central Time at the end of the day when nothing else is alerting. But what I'm going to do to demonstrate this is I started the day for April the 9th, which is the last day on, TOS on-demand feature. And let's see. Okay. And I'm just going to look through here. The best way to make any trade is to just find a ticker that you're familiar with. So as the alerts come through, and for me, I am familiar with most of these companies that roll through, but for most people, they may not be. So find a ticker that you're familiar with. And then you just have to determine if you actually want to day trade with shares or options. It's preference. The TT Blackbox is alerting direction. That's the simplest way to explain it. It's alerting direction for day trades or swing trades. So, as this is rolling through, we'll just say I see Grubhub, ticker GRUB. I'll type it in on my chart. And what I'll do here, since I'm deciding that I want to day trade Grubhub, I'll just filter it like this. So since this is already played out, I'm going to scroll back to the beginning of the day. So here we are. This is the first alert at 8:40 Central for a bullish 5-minute mover. So that's where we'll start at right here. And if you see these little lights right here, this scale-in ready, I have a video just for this that explains this. This scale in ready is only for swing trades. It's irrelevant for the day trades. Another thing, and I should have mentioned this earlier, but if you want to look for certain, PPS values, meaning price per share values, you can adjust this price range right here to filter down to that. I'll show you real quick. So as you adjust this, you'll see those ticker changes and it adjusts accordingly for the price ranges that fall within it. So going back to Grub, and let me pull my chart back up. I'll speed this up ×3. So as I would sit here through my normal trading day, I'm trying to find something to day trade, and I'll wait for whatever ticker that I'm familiar with to alert. I'll filter it, and then I'll look at it on the chart. And when you're day trading, make sure you have enough day trades to be able to, scale in and out. When you're, let's slow this down normal speed so I can explain this. When you're making any trade, whether it be a day trade or swing trade, you have to determine your overall position size, whether it being a certain amount of shares or contracts or a certain amount of money. The best way to be successful in any kind of trading is scaling in. You have to be very disciplined doing this. But I'm telling you, this will work. I demonstrate this every single day. So with your overall position size that you would like to take in that trade, divide that by 10. That amount or number that you get by dividing it by 10, that's what you'll make for every entry. So if your overall position size is 1,000, each entry would be 100 shares. Or if your overall position size is 10 contracts, each entry will be 1 contract. So with that being said, some may be thinking as they're watching this video, well, how am I going to make any money? Well, the thing is, if you take your account and you go all in, trying to, make a certain amount of money in your mind, chances are you will see red and you will have no more capital to cover your trade. The strategy and the goal with it is not to fill your entire position size. If I can make only 4 entries and this thing starts running in my favor, that's perfect. I'll let it run, and I'll take my profits, and I'll move on. That's the goal here. So we'll just say my overall position size would be 1,000. I'll take 100 shares. And this is, again, the same for option contracts as well. I see this first alert coming through at 8:40 Central. I'm like, okay, I like that. Me personally, I just like to take an initial foothold in a ticker because of the strategy. If it immediately runs in my favor, then I'll let it run with just that 1 entry. But if it goes against me, I'm still watching it. And as long as it's not doing anything crazy, then I'll start scaling in a little later on in the day. When may that be? It just really depends on the chart. It could be 10 minutes, it could be 15 minutes, it could be an hour. So I'm going to speed this up times 3, and we'll take it from there. So I made that initial entry with 100 shares. My average price is $45.11. And we're going to let this do whatever it's going to do. Actually, we can just go ahead and skip right here 10 minutes ahead. So we'll let this buffer real quick, see where we're at. Now, as I'm scaling in, whether I made my first entry or even my 4th, 5th, 8th entry, it doesn't matter. At any point that this category change would go against you, so meaning if it would come across as a bearish 5-minute mover, I'll cut that position. It doesn't matter if I have profits or loss, I'll cut it. And then I'll reverse it. Essentially, the TT Blackbox is holding your hand through this flow of the market as it is calculating all of its data based off all of its algorithms coming together, and also its predictive AI. When you see that first initial alert, it's basically trying to say like what is to come. Most of the time, with the 5-minute mover, for instance, we'll just say a bullish 5-minute mover, since that's what we're doing right here. Most of the time, it will alert and then it will actually pull back some before it takes off. This time right here, I made that entry. You saw me make that earlier, and it's just running. So would I scale in here? Absolutely not. This thing is already up over a point from my entry. That's nice solid profit right there. And I would just take it. It never hurts to take profit. So I literally just made one entry with 100 shares there. And this example was kind of easy. I didn't look at this chart ahead of time, and I didn't trade Grubhub on April the 9th. I was in different tickers. But this one actually turned out pretty daggone easy. And it usually doesn't have a run like this from the get-go. So let's say that you're now coming into the market. We'll put this on normal speed at 9 a.m. Central. I'm just going to clear that out. And let's say that, let's filter down for a lower price range. We don't want to do Grub since we already done it. But let's say that okay, let's do this one, since this is actually a bearish mover. So ticker BL, or I'm sorry, it's bearish at this point in the day. Let's filter this one first. BLUE. Okay, so let me pull my chart back up. All right, so it's 9 a.m. Put that on ×3 again. Let it run. And as this was, rolling through, our last alert would have been at 8:40 for a bullish 5-minute mover. I would look at this chart. I'm like, okay, this thing has already been running, yada yada. I wouldn't take it. This thing has already started running. So if you see it running with the category that it alerted for, just find something else. There's no point in trying to jump in this now. You're just chasing it, and you're going to risk getting caught up in a reversal. So we can see this, it continues to alert up until 9:35 Central for a bullish 5-minute mover, and then it just stops for a while. I'm sure it probably just kind of starts chopping around at that point and then does whatever. But let's jump ahead to 10:15 a.m. Central Time. So I just changed the time to 10:14. We haven't seen this alert come through yet, but we're going to simulate that we're just now coming into our day, looking for a day trade, and we're going to wait for a fresh alert or any alert coming through. Now, if you see a category that's been alerting over and over and over, at some point you have to expect, that's going to pull back. So if it continues to alert a certain direction for a while, just hold off, especially if it hasn't made that move. But still, like if you see it just alerting over and over and over a certain direction for a category, just hold off, find something else. There's so many, like I said earlier, there's probably on average 100 different tickers alerting that day. When you see something that has a long stream of the same category alerting, what you want to do is wait for that category change. So we'll just pretend that this thing just kept alerting bullish 5-minute movers. And right here, we waited and we see, this category change. We looked it up on the chart. This is what it looks like. Wow, that looks great to me for a short. Okay, this makes sense. I can see this. I'm going to go short 100 shares. And again, this is always going to be scaling in. So I made my first entry there. And hopefully this one, I would like to see this one actually go against me so I could play this out for you with how I would scale in. So, speed this up. Made my first entry short. My average price is $46.69. And we're going to, just let it do its thing as we scale in. So let's actually skip 10 minutes ahead. Just waiting on it to buffer right here. Man, TOS isn't what it used to be. All right. So I skipped 10 minutes ahead. We can see that we have a green candlestick that's now trying to push up. I'm red, $32. But that's cool. Scaling in like this is my risk management. If this trade would go absolutely against me, like as bad as it could, I'm pretty limited by my exposure in the market. I mean, it's just really that simple. I mean, I'm letting it do its thing. It's scaling in. And, right now, like this ticker could go up 2 more points. And only with 100 shares, I'd only be down $200. And that's just based off of, 100 shares and my example that I'm playing with right here. Now, this thing moved against me 2 points. Chances are it's going to pull back. You have to think, especially with day trades. Stocks, they go up and they go down all day long. There's only so much of a range that is making it, do what it's going to do. Unless if there's a catalyst that just gets dropped on it before the market or whatever. Catalysts usually don't happen in the middle of the day. If they do, they usually end up halting the ticker. Okay, so it's going a little too slow for me, so let's skip another 10 minutes. Let it buffer again, see where we're at. Now, as this is buffering, you can see our time is 10:43 Central Time. And as these alerts would be coming through, this one would have just alerted at 10:40 Central Time, bearish 5-minute mover. Cool. That's good for me because, I'm trying to short this thing. I'm going with the flow here. All right, so at this point, I would decide, okay, this has moved against me a little bit. I'm going to scale in a little bit more. So I made my initial entry and then I scaled in one more time. So this is, my second entry overall. And you can see my average price changed now to $46.89. And right here, we'll let it do its thing. Apparently after it decides to buffer. All right, so to speed this scenario up, I'm just going to skip ahead. Skipped ahead. Now my time is 10:55 Central. And this would still be, it alerted from where we were looking at. It alerted 5 minutes later for the same thing, bearish 5-minute mover. So we're still right here. This would technically be our current alert. All right, so it finally buffered, and here we are. Again, we'll let it do its thing. So it's 10:56 Central Time, and what I'm going to do now, I'm just going to skip another 10 minutes ahead and see where that puts us on the chart. All right. So current time, 11:07 Central. And this would be our current alert right here, which is a money leaving. Now, these money leaving signals, what this essentially means is that there was money put in a trade and pulled out very quickly. And they tend to follow the bearish 5-minute movers. Now, once you see these, like don't go all in just because you see this. This is just more like a heads up and not really a trading signal. So we're gonna watch this. I'm gonna go ahead and skip ahead, and you can see we don't have another alert until the market closes. So this will be interesting how this one actually decides to play out. So let's skip ahead. Now, like I was talking about earlier with scaling in, my overall position size would be 1,000 shares, and I really don't want to get up to 1,000 shares because the less I can do this and make profit with, the better. That extra capital that I don't use, that can be a cushion for like margin of error, based off of my entries, whatever it may be. You always want to keep capital in reserve to protect you, really, and to limit your exposure to the market. Now, had I jumped in initially with that entire position size of 1,000 shares, based off of this value before it updated, I mean, I'd be $370 in the hole with no capital to get me out of this mess. So this is why scaling in is absolutely critical, and it's a must. Like you have to do it if you want to be successful in trading. Even if you're under the PDT rule, you can make 5-6 entries, going long here, and if you sell it all in the end, that is only considered as one day trade. So you can buy, it doesn't matter how many times you buy, it's round trips. So you can buy 10 times and then sell that, sell all 10 of those entries one time, and that's a round trip. So that's just one day trade. That's how that works. And I know some people will probably complain about, commission fees on their platforms, yada yada. If you're worried about, honestly, petty commission fees, then, really, you need to step back and paper trade more and save up some money. If you're worried about, $20 in commission fees for certain platforms, really, like what are you doing here? I'm not saying that to be mean, but $20 in commission fees by scaling in and keeping my exposure limited from the market and getting hammered is better than being $360 in the hole right now and just letting this trade work out. Because in the end, we're going for hundreds of dollars. That's what we're wanting to do here. So who cares about $20 in commission fees? So I'm going to skip ahead another 10 minutes, see where that puts us. Okay, still going sideways pretty much. Let's skip ahead another 10. Still pretty much the same thing. Still going sideways. And sometimes these trades just get boring like this and go sideways. Now, while I'm in a trade, especially one like this that just gets super boring, I've already scaled in twice. There isn't a reason to scale in any more yet. It's not going against me and it's not going for me. So there's no point in trying to really up my position size, since I'm really not going to be getting a better average right here. So I'll just let this hold out, and I'm watching this. I'm watching this flow. Because if this thing would change to like a bullish 5-minute mover, I would just cut that trade and reverse with the flow. So we can see this squeeze going on right here with these Bollinger Bands, and we'll let it do its thing. Now, if you were coming into the day at the very end to try to pull off a day trade, you also have to think, how much time do you have left in the day to actually make a day trade? Right here, this is lunchtime. So if I was coming in during this time of day, I would look at those alerts to see how long something had been alerting in whatever direction, and I would try to find a fresh category change. If this was, I don't know, within the last hour of the market, I'd be a little bit more hesitant. But if this thing was like, if there was only like 40, 30 minutes left, I definitely wouldn't go try to take a day trade there. You have to have time for your trades to work out. You have to be patient. If you're the type of person who has no patience, or you just cannot sit here at a computer and watch your charts in your day trades, then you don't need to be day trading. You need to be swing trading. You have to be able to dedicate your time to your trade while you're in it to actually day trade. Unless if you just don't care about your money. So let's skip ahead another 10. All right. So now we actually do have some downward movement right here. This is good for us. Current price, $47. Our average price, $46.89. Now, we haven't received an alert in a while. So I'm not going to even scale in at all at this point. And I'm not, necessarily scaling in when these alert. I'm just, I'm pretty much watching the price action and looking at my average price. My average price is $46.89. The price now is $47.09. In the gist of things, I'm still pretty close to my average. I wouldn't be getting a better feel necessarily to, get my average, in this sense, get a higher average since I'm shorting. So I would just hold off on scaling in. So I'll skip ahead another 10 minutes. We'll see where that puts us. Still the same thing, just going sideways. Though this is actually probably the most boring trade that I could have just randomly picked. This actually is, going to turn out well maybe not in the sense of profit, because I didn't pre-screen, this ticker or anything like that. But so you can see how I would handle this throughout the day. Okay, so it's pretty much just chopping around right now. And I mean, really, that just sucks. But we'll let it do its thing. We're not going to continue scaling in yet because it doesn't benefit us right now. And again, over here, at this point, we wouldn't have had, obviously, any more alerts, but the last alert is still that bearish 5-minute mover. So nothing has changed yet. So we're still pretty much in the same range, just playing around right here. I'm gonna skip another 10. Same thing. All right, so hold on. Let me back up. We obviously can see it just fell off the bottom right there. Okay. So this is where it's going to get good for everyone who had patience in this trade. We only scaled in twice. We only have 200 shares. We made 2 entries. Our average is 46.89. We're short. Overall, this wasn't a stressful trade because we kept our position size smaller. And now we're about ready to reap the benefits. So I have this sped up on ×3. We'll let this do its thing. And we'll see what it gets us. So we can see right here, this orange line, this is VWAP line. We can see these candlesticks pushing through that bottom Bollinger Band line. Now it's breaking down below that VWAP line. And this is good for us. And we're going to let it run. There's no sense. A lot of people, try to teach, hey, when it's running in your favor, add more position size to it. Honestly, I'm just going to say 90% of traders, that's a horrible idea. If something's running in your favor, let that thing run and start looking for where you're going to take your profits. The reason why is if you start adding on to your position right here, and let's just say that this is the bottom, and it bounces and goes up. You literally just averaged down. You added more size to your position. And with that combination, when that thing bounces and goes against you, that pain is a lot worse now. And you're screwed. So we're still under that bottom Bollinger Band line. We're good right now. Let's zoom in a little more. So people always ask me, where do I put my stops? The way I trade, I don't trade with stops. A stop loss is risk management. My risk management is scaling in. I can sit here, I can keep a smaller position size, let something run in my favor, take profits, walk away. Or even if it runs against me, as long as I'm still following the flow and this doesn't change, I'm good because my position size is small. I'm not going to get destroyed here in a trade. All right, so instead of waiting this all out, I'm going to skip ahead. If there's a bottom somewhere in there, I'll just skip back 10 minutes. Okay, so obviously, we did bottom out right there, literally when I skipped that. So I'll just skip back that 10 minutes and I'll wait for this to evolve. Now, how to find bottoms? When you start having multiple candlesticks in the same area, start going sideways, you probably have a bottom there. So if I was trading this live and this came down and started going back up, here we are, we're above that bottom Bollinger Band line again. That'd be a little concerning to me, but we still have overall downward momentum, and I would kind of let it play out. But I am going to start looking to take my profits. So I'm going to wait to see, what the next candlestick looks like, how it performs. Obviously, because I skipped ahead to speed this up and then had to skip back. I know what it ends up doing, but we'll play it out how I would handle this in real time. So right now, let's see, we're starting a new candle. Right now, that candlestick went red. I would feel okay. But I'm going to wait to see what this one does. It's pushing down red. I'm feeling pretty good at this moment. But, we still need to see how this trade unfolds. That right there is not really what I want to see. But we're only about 2 minutes into this candlestick. So we can see that we have this candlestick right here with this wick. It's coming down. This next one has this long wick, but the body right there, it literally goes down here, reverses, and comes up, and it's green. This next one gapped up and came back down. But right here, it came back down. We clearly have buying pressure in this range. So we have about another minute on this candlestick. Let's slow this down to normal time frame. It's about 40 seconds left in this candlestick. And we can tell we have buying pressure. So at this point, it's just kind of like, okay, what do I do? I need to start looking to get out. So me personally, I would just sit here, and I know this goes back up, but I'm gonna hold off a moment just to kind of see what it really wants to do. Yeah, we can see this bottom forming, but I just want to see if it's going to commit to that. So we're going to start a new candle. And let's see when it triggers. And that new candle will trigger and form based off of an actual trade taking place on the market. Okay, that gapped up. I am out. You can see right there. So, crap, hold on. I actually just screwed up. There. So I screwed up and I messed up my profits right there. Clicked the wrong thing. But I meant to just clear that trade and move on. Now, the reason why I was ending that trade was because, like we had spoke about a moment ago, this candlestick came down. You can see that wick right there. This next candlestick, at one point it came down and it was red, but then it came back up. Created this long tail wick. This next one, it gapped up, ran up, but then pulled back down. This following candlestick, it came down. We saw that buying pressure again. We now know that this range in here, there is for real buying pressure. You can look at these candles and it's bottoming out in this range. But I held off, because I wanted to see how that next candle was going to come out. Now, when I saw that gap up, it went from this candlestick closed at 46.50 and it gapped up to opening at 46.56. I knew right then that is not a good sign in a short position. That's why I was ending that trade to walk away with profits. Now, as I was saying that, you guys obviously saw me screw up. I went up here and actually added more. I was actually looking at the candlesticks and I just clicked on it. But I went to go clear out that trade and I think my profit was actually like $79 or something like that. But still, even with that mistake right there, I still came out $56 profitable. That's how I use the day trades. Now, had you held on to this, and we'll talk about this now. Had you, held on to this and not wanted to take your profits at this point, you would, you'd still be a little red. But when you have a massive candlestick like that going against you, things have changed. At this point, you need to just go ahead and accept that you didn't take your profits when you had the chance. You can see where it was bottoming out, that buying pressure. And then a massive candlestick going across your chart against you. You honestly just need to accept it in that trade because you don't know where this thing is going at that point. It could come up here and then the next candlestick just dump out. You don't know that. Or it could do how it likes to do a lot of times, make a strong push up and then take off running. That's how the market works. Now, had we been up here still shorting and I would have got a massive candlestick going against me, I would have just ended my trade because I know that when a massive candlestick like that happens, chances are it will probably continue that somewhat. So, this is exactly how I recommend using the day trade feature for the TT Blackbox.